All right, guys. Here we go. Day 3 of execution on the play-by-play boxing strategy here. So let's go ahead and get started. All right, so let's take a look here. Let's take a look at what the plan was for the day. All right, so it is March the 22nd now. Our goal for the day was just 38 bucks. Our risk based on the 1.5 is going to be 57, 58 bucks and not to exceed $192. Okay. Obviously, this day, first thing in the morning, what do? We enter our P&L for the day prior, and we enter the number of trades, which obviously was just the one stock. And then this day, we actually ended up doing $589.99 for a 15% return for the day. So far, 3 good days. And then the pre-market volume for the day started at 56. So let's go ahead and take a look at what we ended up doing this day. All right, so it's March the 22nd. We only took 2 plays, which were Apple and Tesla. Apple obviously ended up getting stopped out, and Tesla did fairly well for us. And it looks here like we layered in on just even positions. So I added 1 and 1. I didn't go too heavy on this one on this day, and obviously it was a little pricey. So based on the account size, I could only add so much, but I did want to add, so I added what I could. So let's take a look here. What do we have? All right, so we bought Tesla at 9:30, Apple at 9:36. We ended up closing it a few minutes later at 9:54. We bought Tesla at 9:37, and then again at 9:50. Okay, so let's go ahead and take a look at how this did. And then we took profits on Tesla at 12.12 and 12.31 respectively. So let's take a look at what the markets were giving us this day. So obviously we did a call on Apple and puts on Tesla. Once again, one of those days the tick was well below 500, basically at the $1,000 minus 1,000 level. So again, first thing I'm looking at here is, whoa, we have a lot of selling pressure to start the day. What is the market going to do today? So that is the first thing I'm looking at right at the beginning. I want to see how the tick is opening and if it's going to signify a down day, which obviously, look at this. I mean, it is constantly pounding away at this level here. And if you want to get a better idea of what this looks like, guys, just pretty much, and this is why we put those alerts at those levels. Just go ahead and get rid of everything in the middle so that you don't get distracted. And compare the volume or the number of ticks that you see up top compared to the number of ticks you see on the bottom. And this is what you're looking for. Look at how much selling pressure there is on the day on the bottom side compared to the top side. And this is why I pay attention to it right away, because this is going to tell you what's actually happening in the market, no matter what your stock is doing or what the market is doing. Second thing we're looking at right from the beginning is how did the tick open? I mean, the VIX. So the VIX pretty light, but it did start to rally right after it opened. Obviously, it paused here at this pivot before it continued higher and hitting this 17 level. All right, the markets as a whole, though, what are they doing? They're tanking. So as the VIX rises, the markets are going down. So when the markets opened, they opened pretty much at their pivots, pretty much all of them respectively, except for the NASDAQ, opened a little bit above it, but all of them are at their pivots, which makes it pretty easy. Whichever way they go from here, it's usually going to be the direction they're going. And as you can see here, the S&P pretty much came down through the first pivot, crossed and blew through the second one after a little pause, and same thing with the Dow and the E-minis. Okay. All right, so looking at Tesla on the daily. So you guys remember we tried to take a trade on this one the other day after it formed this pattern. We failed that day. On this day, we caught a nice ride, and this is why we remain objective, guys. Because at the end of the day, yes, it bounced off of this low here, right? So it formed this pattern, which tells us, hey, we may be going higher. And if I'm looking at a longer time frame, after it hit this bottom here, let's take a look here. Let's see if this matches up with anything up here. All right, so taking a look at that, so this looks like, hey, this may be some support, some sort of support area here. So if I'm looking for it to bounce up higher from here on a longer scale, longer picture time frame, I'm looking for it to start coming back either to this area here and then an even longer time frame to this area here, right? So let's go ahead and draw that line again once to the side. There you go. So obviously these are the areas, the key areas on the bigger picture type scenario. So those are the pictures I'm looking, the areas I'm looking, but I'm going to remain objective. This is why. So even though the other day I showed you guys, yeah, it caught me, at the end of the day, I had to take what the play was giving me because the rules are set for a reason. If we're boxing this thing in and it breaks and it meets my criteria, volume-wise, market-wise, and everything else, at the end of the day, the trend was lower for the previous time. So I had to take it. And even now, the trend is still lower overall. It tried to bounce higher, but now it gapped lower after it closed up here. It's gapping lower. And when I boxed it in, it's obviously went straight down. Because as you can see here, it barely made an attempt to go higher. So let's go ahead and look at the intraday picture here. And this, you couldn't have asked for a better scenario for boxing this thing in. This is what I'm talking about. I mean, it just gets easier and easier sometimes. So yes, normally had you not had the pivots here, you would have wanted to use something up here or here, but the pivots made it easier for you. So the pivots are telling you two things here. So let's take a look. So you're going to use the pivot as the first box on the tops, on the high side, and then here you have a natural barrier, which is the 200 MA. So it makes it kind of easy for you guys. So I still waited the 6 minutes just to make sure it wasn't going to bounce back off. I wanted to see which one was going to be stronger, either the pivot or the 200 MA. Obviously, the pivot was stronger. And once it broke below this level here, I decided to take it. It hit the pivot on the low side, but I had strong enough confidence that we were going lower. Volume was coming in. The selling volume was well above 50%. So it gave me enough confidence that we were going to go lower, and obviously we did. So I got in on the first candle here, the 10-minute candle at 9:36. My second entry was at 9:37. My second entry was at 9:50. 9:50. So this is the 30, 40, 50. 9:50 candle right here, right at the pivot, probably right when it crossed below it. And normally I like to tell you guys, yes, you want to wait for a confirmed break below the pivot, but we are entering based on the box in entry, not on a pivot entry anymore. So when we are entering based on the box in, you have to trade the trade and play the play based on the original entry, not on the pivot that's there anymore. If you have waited for the break, yeah, you could have just waited for a confirmed break and got in here or on this candle, but now you're going to be scared away when you see a pullback like this, because obviously this bar was at one point fully green here. And, if you're not patient and not going to trade it, you're going to go ahead and get scared out and get squeezed out for nothing. And second, this is why you layer in. You want to get in so that you get a better pricing. My stop is up here. But if I got in here, this is obviously a way longer distance to lose money. So I want to get in and get the best pricing for my initial entry, because that's the one I'm going to let run. And then I want to layer in again when I see a confirmed break below, or confirmed break below any pivots or any points, or obviously in this case, a confirmed move lower. So I layered in. Obviously, you see this happening. And then my first exit was on Tesla at 12:12 and then 12:31. So let's go ahead and take a look at that. So let's see. So 12 o'clock here. All right, so this is probably the 12 candle here. 12 o'clock candle. So obviously the pattern that was being formed was a little shady. What do I have? I have the RSI low on the 10-minute, and then on the 30-minute is coming off of the lows. So those are the things I'm paying attention to here. And let me just double check that I lined that up correctly. So this is the 30, 40, 50, 10, 10, 20, 30, 40, 50, 11, 10, 20, 11, 30, 40, 50. Yep, 12 o'clock. So that's the 12 o'clock candle right there, guys. When I saw that pattern being formed, I decided to take some of my profits. What did I collect on that one? 1070, so 1066. This is the 270 puts from 678. So as you can see here, we went from, I spent 678, $1,000 we made on that one, $388. All right, and then my next exit on that one was this is the 1220 candle, 1230 candle. So once again, what happened here is the 1230 candle basically broke above my stop. So as you can see here, let's go over to the 30-minute chart. I'm following my stops. So the pivot was my first stop, the 30-minute, the next 30, the next 30, the next 30, the next 30, the next 30. I want this to continue lower. I want to continue being right. But when it failed and it closed above it, on this candle right here, I had to get out. And that's exactly what I did. Why? Because that's the plan, guys. You follow the plan, you will avoid being stuck on a rally. This could have kept going higher. I don't know that it's going to stop and continue going lower. You know what I mean? But this is why it's important to layer in. I could have left this one since I was already deep in the money, but I decided to call it a day. And I could have did the same thing I did with the other trade and just let it go lower. But again, it's just one of those days. It's like, you know what? Let me just take my money and run. I was happy with the profit. At the end of the day, it didn't run much lower. Anyway, as you can see here, it pretty much stayed in that area. And the only thing that would have hurt me here was time decay. So time would have killed me here. So it actually worked out. When it stopped, when I got stopped out, I just took my profits. So again, the first reason for getting out was just a pattern. I wanted to be safe, not sorry. It continued lower, so I was happy. But then I ended up getting stopped out anyway, and that was that for Tesla. Apple. Let's take a look at Apple. So Apple, obviously, on the daily, it was heading higher. I mean, it broke above a 200 MA the day prior. I had no reason to assume that this was actually going to reverse. There was no reversal patterns being formed. The only thing I can see here is the RSIs were both over 80. But even so, I mean, they were pretty far apart. I was expecting a little bit more room higher here for them to run a little bit higher. But that was the reason here. I obviously do take a look at the daily every single time before I get into the trade. And when I boxed it in, as you can see here, I mean, what do we have? A natural barrier here, right on the pivot. Not a pivot, I mean, on the 50 MA. And then the low was here. So again, I took it high. Volume was awesome. I mean, look at this volume, guys. I mean, you can't deny this trade. You know, this is one of those things. Yes, RSI was at the peaks, but you know what? RSI could stay at the peaks for the entire day. When it comes to the open, you kind of have to go with the volume. The volume will win over the RSI on most cases. So I just took it based on the volume and obviously the momentum going higher. Obviously, I didn't layer in because it went against me. So this is a perfect example. You know, when it didn't continue going higher, I'm obviously not going to layer in, and obviously I got stopped out when it came back lower. So on the 950 candle, as you can see here. Okay, so that's pretty much it for this day, guys. I'll see you guys on the next one for day number 4.